Hi everyone, I'm Alejandro Freijo. I'm Managing Director in the Economic Development Area and Employment Area in the City Hall. And I want to say that I'm so happy always to be here in this amazing space in the pool. So first of all, I want to say thank you very much to the pool, to Christian and all his team for the support, and also because they are always supporting all our initiatives. Also, I want to say thanks to all the speakers, because I'm so sure that today we will have such an interesting event, and also we are going to learn a lot from them. And also, I want to say thank you to Junta Andalucía, Javier, because he's always supporting our initiatives too, and also because he understands very well what we are doing, and also what is happening in Marbella. Maybe some of you are thinking about what's happening in Marbella, no? The thing is that the world is changing, and it's changing so fast. And Marbella has to lead this transformation. And what are we doing from the town hall? We started a new project called Marbellup, in which we are working for attracting talent, creating talent, supporting entrepreneurs, investors, and all this digital ecosystem. Because Marbella, it's not only a place for tourism or lifestyle, it's also a place for live and for work. So supporting all these things that I have said, it's so important to start this new era. So this event, it's one more step in our journey. So thank you very much to all of you, and welcome to this new Marbella. Welcome to Marbellup.
All right. Now, before you have money to manage, you need to get that money first. So it only makes sense that we start there today. Our first panel is all about how founders can raise capital effectively, whether you're talking to VCs, applying for grants, or bootstrapping your way forward with your company and venture. How you present your business and yourself can really make all the difference. So please help me welcome our first three panelists of the day: Pablo Campos, Managing Partner at Chief, Strategic Innovation Funding Consultant Isabel Milan Sanchez, and Antonio Moya Roman, Investment and Finance Professional. All right, welcome everyone. I'm excited to have this conversation. Pitching is certainly one of my favorite subjects when it comes to startups. Before we begin, I want to go around each speaker and ask, what's one thing you wish more founders understood before they start pitching to investors or other forms of funding? So why don't we start with Pablo?
Excellent. Well, first, let me say thank you again to the pool for giving us the opportunity to be here in such an incredible place. Thanks for all the organizers, Junta Andalucía, Marbella. I think you are doing great. I love the speech. I love that Marbella is not only the place where everybody wants to come, but also to stay and live. So really love that. And now, coming to your question, Amit, I think one of the things that I wish entrepreneurs think about it is like when you are approaching an investor, you need to think as an investor. So what I would love them to do is to do more research about the investor. So you need to think about what does this investor like? What does this investor invest in? Which verticals? Which tickets? Does he have right now any other investments in companies that could be a conflict? Like my company is similar to others he have, and he could have a conflict of interest. So really do a research, and when you go to him, when you do this exercise, it will really narrow the scope of investor you're going to target, but it will really increase your chance of success. And then be very straight. Don't send this email because these guys don't have time. So I have seen wonderful things happening. I have seen people sending 3 lines and ending the email saying, I saw you love ski, great picture, whatever, like a joke. So those genuine messages sometimes get a lot of traction. So I will say that.
Yeah, excellent. I remember when I started my career in startups, and one of my roles when I was an analyst to begin with was whenever we were pitching to a new investor, my boss would ask me to research that investor and see what they've invested in, what kind of verticals they're interested in. So that is certainly good advice. You have to know who you're talking to if you want to talk to them effectively. Isabel?
No.
No?
No? No? Can you hear me?
Yeah.
Yes. Okay, thank you, Amit, for inviting me to join this panel, and thank you to all of the organizations to organize this. And yeah, regarding the, well, I think at first I need to introduce myself because basically what I do, I work with early stage deep tech companies. So what I wish more to those companies is to work more on the financial side. They are usually coming from the academia with a strong scientific background, and what I really miss is the business side. Last week I was reviewing a pitch, and one thing that I asked to the CEO was, okay, what's the price? And he didn't know. He didn't know the answer. So yes, reflect on the business side if you are at that early stage and coming from the academia. That would be my advice.
Excellent. And if there's people here or at that stage, this is a great place to start doing that. So thanks for coming. Antonio, what about you?
Well, thank you for the invitation first. It's a pleasure to be here with all of you. Well, I think I used to have two questions at the beginning when I have this kind of conversation. One of them is related to who are you and why are you different, right? And I think that's the first thing, and not only thinking about why are you different during the short term, do you have the capability to maintain that difference for the long term? Because in the reality, you need to find an investor, a possible partner thinking about long term, not only short term, right? And one more thing that I used to miss, and I think it's very positive for a possible investor, is speaking about the risks. You know, because all of the entrepreneurs, which of course they are fantastic, but they sometimes may forget to speak about risk. I am an analyst, you know, I'm looking for return, but of course we cannot forget to, or we cannot separate return with one more R, which is risk, you know. And I think it's good if entrepreneurs speak about risk, because the implication of that is that if I am going to invest on you, I can feel that you can control your company and you have dedicated time to analyze risks, you know? So the confidence is multiplied. Yes, more or less. Did I help with that?
Excellent, yeah. So know your investor, know your business and your financials, know your risk, and think long term. All very good tips. Pablo, I have a question for you. You review dozens of pitch decks. What do you personally look for in a standout pitch, or what are some common patterns from those who normally land a follow-up conversation, in addition to a sense of human interaction and humor that you touched on?
So that's a great, very important question. The first thing you always look is for a good problem, a real problem, right? And then immediately I would love to see a solution, because I have seen a lot of great solutions looking for a problem. You don't want that, no? So the other thing that I love to tell entrepreneurs is that less is more. I love pitch decks that are like very seamless, not a lot of text. And then you have time when you're meeting to tell all the information. You don't want to overwhelm the guy looking at the slide deck and then he's not listening to you. It's the opposite. You put just your best metrics, your best messages, and then you talk and you say everything. So that's another thing. Another thing that I always tell them is that benchmark that always has to be, you compare your product to the other peers. I always see like green, and the other red. That it doesn't give you a lot of information. So what I would rather see is just tell me why are you better in those things. Explain a little bit, and don't create that benchmark that I haven't seen a pitch deck where they are amazing in everything and the other that's horrible. You lose credibility. So another thing that is important is the product. We also, when we're working with a startup, one of the things that we do is, okay, you have customers. I understand, yeah, we have customers, okay. Can I contact them? I like to see what the customers think of the solution. That's one thing, in my opinion, should be mandatory. You need to see what the market is already, because there are customers already there. We love to hear what they say. So that for me, it's incredible, incredibly important. And then finally, you just have to, one of the other things that I really love is you need to put on the shoes. Before I do a pitch deck, I put on the shoes of the investors, and I anticipate which questions will I make if I were investors. So think about ahead and answer those questions before. So when you pitch to them, you have time to discuss about that instead of getting the questions. No? So those will be like some of the at the top of my head tips that I will give them.
Yeah, I mean, I work as a communication trainer, and I think the biggest mistake we make as communicators, whether you're pitching or presenting or doing anything, is focusing on what you want to say rather than what the audience needs to hear. So that's exactly right about understanding the investor. Antonio, from a private equity perspective, what signals do you look for in the team, so beyond the financials and business side, that tells you, these founder or these team of founders know what they're doing?
Sure. Well, we try to find many things, right? But one of them, of course, I think it's the relationship between them, if they are more than one. The expertise, of course, and if they can answer very quickly about the questions, because that's a good input. And of course, the potential of them, basically. I think, I assume we will speak about later about how to finance a company or things like that, but in the reality, we are not looking for financial guys. We are looking for a project and a team. Because I used to teach at the university how to finance, how to invest. For example, I used to repeat to my students, look, if you are entrepreneurs in the seed moment, what do you have? And they don't know what to answer, I used to say, I'm sorry for this, but you have you and your project, right? That's all. But of course, that's a lot of value, if you believe on your project and the team has the expertise and you can check that, the light, that's something very important for us in our case.
Yeah, makes sense. And Isabel, you come from a different kind of background from like a grant and non-dilutive funding. What makes applications or like pitches in these situations like fundable from the beginning? Because I'm assuming sometimes you even deal with companies who are like pre-product or pre-revenue, so they don't have, for example, customer testimonials or something like that.
Yeah, that's true. Okay, what is important in a grant application is the fact that you are clear and you show some type of credibility. So clear means that even grant evaluators that are non-expert, can be engineers or can come from the VC expertise, need to understand your solution. Remember that I work with deep tech companies, so very high complicated technologies. So clarity is very important, and then credibility, and credibility is all. How you can prove credibility in an application with, for example, if you work with pilot partners, maybe you can insert a letter of intent saying, from that pilot partner, saying that they are interested in piloting your product or your service. Or if you present, I don't know, whatever, back with data. If you have developed a first prototype, why not insert a picture? Or if you have that prototype working and you have a channel, YouTube channel, and there is a video, refer to that video, because it's going to explain in an easy way, and it gives in an easy way how it works, and also it provides credibility. And of course, before all the clarity and the credibility, whatever you have, your project has to fit into the criteria of the call.
Yeah, I mean, what I'm hearing is really about like making it real, aside from all the Excel sheets, as exciting as those can be for analysts or those who have come from that world. Going into, speaking of Excel sheets, many founders struggle with presenting financials, especially if they're early stage or pre-revenue. Maybe they're not necessarily from a financial background. Antonio, what would be your advice for clearly communicating value, scalability, and forecasts in a way that's realistic?
Sure. Well, of course, investors are not looking for financial guides, as I said before, right? So you don't need to prepare an incredible business model. No. I think you need to project a balance sheet with 5 years, a forecast. No. I think because later, if you have an investor, maybe you can ask to have a financial guide from your partner, so it's not a problem. I think the best way to do this, of course, if you have it, it's much better because you did your homework, okay? But you don't need it. In the reality, I think the most important thing is, how are you going to sell your product? How many units and what's the cost? So in the reality, it's not a profit and loss, it's not a cash flow, it's not a balance sheet, it's tell me the volume of sales, the rhythm of sales, tell me what's the cost, if you can manage the cost, do you have a plan in case of or increased sales or not? Because in the reality for this kind of companies, investors are looking for growth, okay? It's not a value investment. I'm sorry, but well, in finance, we used to speak about 2 strategies, right? Value and growth. Value is when we invest on sustainable companies, big companies, and growth. Growth when you have the potential to generate future cash flow in the reality, but it's growth, potential. In these cases, we are looking for people who can sell. And how many units? Can you answer that question? And can you control the cost? I think if that's very, very clear, that's good enough in the reality. Okay?
I could not agree. Can I comment on
Yeah,
that?
of course.
I could not agree more with him. If you go to an investor
Thank you.
whose work is financials, the more in detail you go into financial, the more risk you are having in getting into trouble where they're going to get. So just give them the tools. Like he said, tell me just the enough tools so I can build myself my numbers, but don't go into a lot of details because there is a high risk that you will get into trouble because they will see this doesn't make any sense. So it's better to give them the high-level drivers and then let them build their own.
And in addition to that, what are some other kind of immediate red flags that would put you off as an investor, even if the idea is like promising in itself?
There are many red flags. There are many, fortunately, no. One of them is when you see a lot of passion in entrepreneurs, super passionate, but you try to tell him, okay, how do you make money? And he's unable to explain quickly, like in 2 sentences or in 30 seconds. That's one of the red flags that we identify. The other could be more funny, maybe it's not that relevant, but it's funny, when I see a founder, entrepreneur every day in events, every day in podcasts, I will say, when is he working? No, I will expect him now. It's good you need to go to, but there are many of them that are everywhere. And then, as I said, I like to see a good problem and a good solution. There are many, many good solutions looking for a problem. That's another big. And then, I mean, we could talk for a very long time, no? Like if you see people leaving some of the staff leaving at the second round or decreasing their equity, something like that. There are big red flags. So there are red flags across the board. There are many.
And Isabel, in your work, what are some of the most common reasons that grant applications or other public funding proposals get rejected? And how can startups avoid that if that's the route that they're trying to go?
Yeah, you will be surprised because at the end we share many common red flags. Okay, first of all, as I said earlier, I think you need to make sure that you fit in the call requirements and you are eligible. For example, I work in the AC accelerator, and for that, you need to work on a high risk, high impact, deep technology. Your company has to be registered in Europe or associated countries such as Israel or UK, these type of things first. And then for the rejection, in this specific program, the IP, the intellectual property is very important, so you have to protect your IP. A pending patent is okay, but better if it is granted, because this means that your competitors cannot copy your service, your solution. That's one example. Another one, red flag in the program that I work for, is solo founders. They see high risk when there is one just founder because, as you said, they are highly motivated at the beginning, but they expect investors and evaluators of grants, they expect an exit, or they expect you to see that your company grow. So, and the motivation can be lower at the end, and something can happen and it fails. Yeah, this type of things. Also the TRL, I don't know if you are familiar with that. This is the technological readiness level. Europe, the European Commission tend to work with this type of terminology. So you need to know what is the TRL level of the product that you are, technology that you are working on, and put it in a very clear way in the application. And there are many more red flags, but I think
Seems like there's a lot of things that investors or grant providers
Another one,
don't like. Yeah.
in the team is super important. The earlier stage, the more important is the team. Sometimes they want to impress more the investors and they put people in the team, and then when you do a dig in, then they are not in the team. They are like
getting.
so, advisor, whatever, you know. So that's another red flag when there are people part-time, there are people that are not even in the project and they just want to impress you. So that's another.
And Antonio, would you have any like additional tips for founders to build like trust with investors as a team, like during and after the pitch process?
Yes, okay. For example, if we think about humility, you know, sometimes, that's an example, one more example, typical question is that I like to do is, or to ask is about this, why do you need me, right? If it's only the money, we are done, right? Because in the reality, that is not good for the entrepreneur neither, you know? If you are working on your humility, you know, I like to ask why, where are you good and where you are not doing a good job, right? If they explain that, the negative point, it helps me a lot. And I can implement anything to help you at the same time, for example, right?
Yeah, so like being more honest about what they know, what they don't know. Now moving, you know, Isabel, you work specifically with deep tech ventures. Are you seeing increased use of AI tools for different things like analysis or even like something to do with the pitch?
In them or me, myself?
On both sides.
Okay. From my side, yes, definitely. And it reduced the amount of time that I invest in creating first draft enormously. It's a boost of productivity. Nonetheless,
what are some of like the specific use cases that have helped?
For example, we in our team we use the generative AI, the typical chat GPT, and with this we can create, I don't know, many project title ideas. When we enter in a new technology, you can have quickly an overview of the state of the art of that technology. You can obviously correct your grammar quickly, etc. Nonetheless, I can say that I like to say like garbage in, garbage out, meaning that if your prompt is weak or vague, this is what you get, a weak or vague answer. So the best thing is to use your human insight, human intelligence, and combine that with artificial intelligence. But I like it.
I was speaking last year. I met one of the like top guys who are working on Microsoft's AI capabilities, and he said that artificial intelligence is just an extension of human intelligence. So it's exactly, you know, garbage in, garbage out is you know, you have to know how to use it correctly for it to be of value. Now moving on from that, Pablo, do you think founders are expected to be more data savvy now that AI and technology is such a big part of our lives? Do you expect them to be more interested or able when it comes to using tech, even if their idea isn't necessarily tech focused?
I'm seeing they are starting to leverage for many. It has a lot of potential. I think it's just starting, but I'm seeing it getting great traction for many use cases. For example, lawyers. Lawyers now, when you start a case, you need to understand the case and you need to go. Most of the cases resolved based on the past, no? So now with AI, you can bring all the, I don't know how you say jurisprudencia. I right now have, but you can put 20 years of cases about that in the system, and then say, hey, this is my case. Tell me the lines that I should target for. That's just an example of how you can use AI. Same thing with doctors now when you combine, past the history of the patient. It's basically a lot of getting all that. Everybody's becoming smarter. Customer service. If you have some part of your company now with AI, you can automatize a lot of customer service. So there are many different ways. We are just starting to see which as those that are getting more traction. But yeah, I see tremendous potential.
It would be interesting to do when you mentioned about like knowing your investor and kind of thinking about what questions they would ask you. If you have enough information on a profile, you could even like create a GPT for that investor and like pitch to the GPT and see what questions they
totally. I'm sure. I will do it. I will do it definitely.
That's a good use. All right, really great insights. Final question before we open it up to questions from the audience. Given everything that was discussed in your experience, what would be your number one top tip for a successful pitch? If they had to think of one thing, I know it's very hard. Let's start with Pablo and go around.
Top pitch, less is more. Like I said, less is more.
That's a good tip.
A tip, I would say, okay, let's start with the problem impact, and then the technology radically new, and then the impact, but in the I don't know.
Yeah, create with a purpose to solve something, not just with a purpose to create.
Care about the design. The more professional, the better, and the less, the better. And be straightforward. Yeah. I used to work with pitches of 10 slides. In 10 slides is enough.
It's like doing a tweet. When we had limited characters, it forced you to think a lot.
Yeah,
because you only have 3 lines. It's the same exercise that entrepreneurs need to do. Really think to shorten, and then you can keep expanding later when the investor.
Yeah, I mean, when I work with founders on their pitch, the first exercise I have them do is to narrow down to just 4 sentences. And if they can do that, then they can build on that. But if they're not able to distill it down to just that, then it's a problem. Antonio?
Yeah, well, I think sometimes when you are preparing it, sometimes you forget other things. You don't think about the investor. What's the motivation of the investor? Because typically you are thinking about the money, right? The money for your pocket to develop your idea. And I think sometimes we miss, for example, or if you are preparing the pitch, you can offer other things to the investor. For example, what's my motivation to invest on you? My capital appreciation, the value of the company in 5 years. Incomes, they are not incomes because they are not dividends. But for example, inflation hedge, nowadays it's very important, and nowadays much more. Is your boat related to inflation or not? Can you pass through the cost to the customers? Because not everything is about profit. Maybe it's diversification. So you can offer that during your pitch to the investor, for example. And it's not only a question of profit. No. Maybe many other inputs like diversification or hedging against inflation or things like that, which are adding value to the investor, right? And of course, the flow of the pitch, flow is flow, right? You cannot be speaking during 20 minutes. It doesn't make sense. Go to the point, and that's all, yeah.
Steve Jobs said that the best employee is the storyteller. So I think he meant something.
Yeah, exactly. Someone asked me just before we started, like earlier today, who like my favorite public speaker is when it comes to business storytelling. And I think Steve Jobs really kind of changed the landscape of how to incorporate storytelling into business communication. All right, we're going to open this up. Thank you for all the insights. We're going to open this up to the audience. So if anyone has any questions, just raise your hands, and we're going to come to you with a microphone so you can answer. There's.
We'll get the mic to you so everyone hears.
Thank you. My name is Virginia. First of all, Pablo, I just want to point out something. That is, I know that Catalonia, which is the Tribunal of Catalonia, is looking for actually using AI for the small sentences or anything. They will do everything, the small one. They will use AI to prepare absolutely everything, because obviously it takes too long. The tribunal are really busy. They're really busy, so they're going to start now. They're looking for it, but most probably by the end of May, I think they're going to start, if everything is okay. Which is they're going to use AI for the small cases to get to a sentence and all the jurisprudence and everything. And then it's going to be overview, obviously, by a lawyer or a judge, and then the sentence will be done. So that is already, actually it's already planned. I heard that today, and that's in Catalonia.
It's scary, right? AI is going to be the judge, so
Well,
that's why we need OpenAI.
At the end-
Even OpenAI is called OpenAI, they're the one that is closed. But we need like decentralized intelligence, and that's why it's so important.
actually, the judge is always going to be a human, but that's why the overlook has to be by a human, never be by a machine, because the machine is trained by human, but nobody is perfect, so even the AI is not perfect. So that's one point I wanted to show up. Now, normally the pitching, it's about 5 minutes at the beginning when you start, and then after you give the preparation and everything. I agree with you, with all of you. I think storytelling is very important, because that makes you believe in all what's come after. The person, if it's truthful, the idea and everything. And after, when you see the passion of a group, of a team, and then after you look through the books and everything. So storytelling, I think it's a key. And then I have a question. Why do you think, because it's completely possible now, which is being pitched by an avatar? So if you want a pitch, the pitch will be on the screen. GPT can do that. We can create an agent, an avatar, and then he could pitch and answer your question in a nanosecond, not in 30 seconds, in a nanosecond. And you know that all these things are made by the team. So it's an extension, it's a better team.
I see it in the other way. I'm thinking, and I will put the agent for the investor. So the investor gets an agent, his agent hears 100 pitches, and then say, hey, those three are the ones you want to hear. So that's a great, I'm sure that will happen.
I'm not sure about that, okay?
In some of the grant applications, they strictly say that please do not use in your video, because they have to, one of the attachment is a video. They say that please do not use AI to do the video. So because they want to see the people, they want to see how they look, because they want to see the motivation.
That's what I'm saying. From the entrepreneur side, doesn't make sense, but from the investor who has the
yeah.
I mean, it's still very new, so it'll be like interesting to see when we do another event in a couple of years, what has changed when it comes to like the use of AI, because there are really exciting ways to use it. Yeah, I mean, I have a friend who works for a company that like creates avatars for business professionals, more specifically for like LinkedIn and things like that, so they don't have to not waste time, but like spend time on content. But it's more like generic content than like asking someone to invest, millions of euros in the companies. Yeah.
Yeah. For the moment, for example, I can share some cases with you. Okay, I represent family offices, right? I am not the investor. I am the analyst for them. But for the moment, one of the first questions they asked to me after having my meetings with these guys is, "How are they?" You know. Maybe it's difficult to do it with an avatar, right? confidence, you know? What's the level of confidence? Because I'm not going to invest my money today, in an avatar, okay? I know who to know, understand, but in my case, okay, maybe you have more cases, but these guys, they want to know who is behind the avatar, you know? If the avatar is great, fantastic, amazing, of course.
I don't see it.
No?
No, I don't see it.
Meeting an avatar that want to present me, I will never. As I said, the other thing, yes, like me as an investor having my avatar who listens to 200 pitches, and because that's what makes sense, right? Who has the lack of time? The entrepreneur using, for me, will be a red flag. This entrepreneur doesn't have the courage to present. Why is he using an avatar? No.
Unless I would say like maybe unless that's like the specific product they're working on, but otherwise, yeah, I agree. Let's move on to the next question.
Hi, my name is Anne-Marie from Estepona Business Club. I have a question. When is the best time to get investment in your business journey?
Interesting question. Anyone want to give it a go?
In what moment? Can you repeat the question?
At what stage in the business? So as a startup, when is a good time to actually get to ask an investor for help?
Okay. Well, interesting question.
If it's amazing, never.
Yeah. You know that there is a life cycle of a company, right? So see, it's growing. During the 2 first years, the model should be checked, you know. And in the case of private equity, that I know much better, during the first months, if you're a startup, you are financed by family and friends, right? After that, maybe private equity and maybe some hedge funds. For example, I had a meeting 2 weeks with a venture capital fund. It sounds bad. People doesn't like to listen about, BlackRock, the bad guys, right? Careful with that, under my opinion, because I'm not sure about that. But at the same time, I discovered these guys, their name is IDC. I recommend you to go to the website if you need to be financed. This is a fund of funds, and they are investing in startups. And it's a new completely model, because they are investing during the first 2 years of the company. Something amazing. I know these guys very well. They are coming from Guatemala, but these guys are operating nowadays in Europe and US. They are going to invest 150 million in 1 year, and the model is amazing. Look at this. Only 1 minute, okay? Because the model is very good, and I think it's a great example. Why? Because they said, look, they are entrepreneurs, and they said, what I am missing here? I am missing to have an atmosphere to share my knowledge with others. And I am missing money. How can we mix both? And they said, let's collect money from different people. They have very good contacts, many family offices. And they said, my model is going to be based on this. I'm going to invest on companies, on startups, but I'm going to tell to these guys, to these startups, you have to share your knowledge with the rest of the startups in our ecosystem. You are obligated. That's a condition. This is not a question of money. No. This is a question of knowledge. So you can have in your board maybe one guy from a different startup, and you will always have the finance guy from the fund. That's amazing, right? And they are going to invest on 3,000 startups. 3,000. The result of that can be huge, because you are going to share your, not the profit, but the knowledge of a unicorn with maybe other companies that are not unicorn. Maybe they are going to be small caps, it doesn't matter. Not everybody has to be a unicorn, okay? Important too at the same time. So I think this model, IDC Venture Capital, for example, is a good explanation for that. I don't know if I helped, but...
So IDC was the company? Yeah.
IDC, yes.
So if you're looking for funding, maybe that's the way to go. We'll take one more question, and then we'll move on to the next panel.
First of all, thank you guys for taking your time and sharing your knowledge. We really appreciate it. I have a question to you, Antonio. How much does it play out with public funding when you see a case that already received public funding, as an example? Does that create some credibility? Does that create, what's the balance between you guys?
What's the balance?
Do you want me to clarify the question?
Yes,
maybe?
because...
Okay. Say that you get pitched 100 pitches, okay? Out of these 100 pitches, you see that 5 pitches have already received public funding, right? But they need a top-up or something like that. Does that create any credibility, or it doesn't matter for you?
Of course, everything helps, you know. I think everything helps. In the reality, look, in the reality, we value a lot people, you know, the team. You can feel it. And you can feel it. Well, of course, you need to analyze many companies, okay? It's a question of expertise, of course. That's why I receive my salary, right? But in the reality, in 5 minutes, you can check many things, believe me. It's like teaching. When you are teaching in the university, you know very well what are you doing, very, very well, after some years, you know? This is the same. So the credibility is maybe if they were financed initially by other guy, it helped, but it's not the most important thing. I think, again, it's the team and the idea. I used to repeat this. Look, the value is on you, okay? So...
Let me just add one thing to that. So is it, I'm going to change the question, but still kind of keeping it in the same. Is it any chance that you see any negativity with a project that have received public funding?
No, not in my case.
Thank you.
No, I think they are doing a great job. And I think, of course...
I don't see any negative aspect by getting some...
It's a validation, will be positive.
Indeed, it's a validation. Indeed, the programs that we work, the schemes, the instruments are highly, highly competitive. It's a certification that your project is valid. So, and at the end, and also responding to the previous girl, it's not only about raising equity funding. You can also think of the European or national public funds. So think of financing your company through different sources. So, yeah.
Of course. I understood your question better now, but I was thinking about it. It's not because the English, it was the idea. I think, well, something that you cannot lose is your flexibility. I'm close, right? I think that is changing. Look at this, you know, but of course you cannot lose that because an investor in yourself, you need to be flexible, right? It's like, okay, I have to sign a shareholder agreement, something to be done, okay? Something to be done always because the rules are there. But you need to be flexible. You are in a startup. You are in the growth stage, so you cannot be like a table, you know? No. Did I help now? Better?
Okay.
Another thing is that the only funding that you have raised during the whole story of your company is just public. Then it's negative. It's like 5 million in ERS, the A accelerator, the DDD, and never private funding. Then it's negative. But the good thing is the combination. And for sure, public funding, as competitive as they are, is a proof of credibility. Right. So go for it.
Excellent. All right.
Can I ask the last question?
We'll give this 1 minute, a very quick answer to the question.
Question is for Pablo. Why investors don't like solo founders? What are the disadvantages? Isn't it easy to work with one person rather than 3 or 4?
It will depend case by case, no? Solo founder, I have no problem with a solo founder, to be honest, but it will depend case by case. If I find a solo founder that has been working for 3 years, I will start maybe or 4 years, and is struggling, that I will wonder why couldn't he find a CTO or a CMO? Nobody wanted to join. That's a red flag, no? So you will need to understand case by case what type of project it is and if it makes sense compatible with a solo founder, no? Also progress, how much progress, that will be the key variable that I will be looking at. how much progress did he do, and if he has good partnership. He's solo founder, but has amazing partnerships. Could be so. I think it's very wide.
Excellent. We're gonna end this panel now. You can continue. You can ask them any question you want when we're done during the networking session. Thank you guys so much. We're gonna move on to the next panel. Isabel, you're gonna stay with us for the next one. Pablo, Antonio, thank you very much.